All right, all right. Tonight is kind of just a review night, guys. Kind of go over the trades of the week. Welcome to Beginner Trading. And that way you guys can see exactly what we do on the weekends and when we look at stocks.
Yep.
Um, these are just kind of some stats over the last month. Just kind of really starting to push it, trying to get up there in size. One of the key things is that as we increase size, we're going to see the profit factor go down. A little weeks back, I had this up to like 3, and it's gone down to 2.3 now. I want to really keep it higher than at least a 1.8. But I always talk about our approach meeting our stats, and this is the real key factor that I really look at is how much profit am I really taking. So you guys see, it doesn't matter really what I'm risking in this case, but for profit in this, I'm still getting that 2.39. So compared to my losses, I still have that 2-to-1 ratio still holding. And if you can have that 2-to-1 ratio, it doesn't really matter your sizing. The gains and losses are just going to stack up.
For sure. So
That's really
here, explain this to me though. I actually don't know what the profit factor is. I thought it was risk reward, but what is
okay.
it exactly?
So the way the profit factor goes is that a lot of us calculate risk and reward before a trade, like let's say a 10-cent risk for a 20-cent profit. And we would take that as a P&L ratio at a 2-to-1.
Right.
But what most people don't actually go back and calculate is what's called a profit factor. Profit factor is taking, not only is it takes your actual profits, your actual gain per trade, and then it takes your average loss per trade.
Uh,
So your average loss becomes your risk.
so this would
That's
mean that your average win is 2.39 times bigger than your average loss. Is that correct?
exactly.
Okay, got it.
But this is really the key that I've seen over time, that most traders, they see like they can have good stats on this side. They can be 70% winners, but then you look over here on the profit factor and it'll be like zero point 0.7, 1.0.
Right.
And this is where it comes into, kill you. There is commissions out there, guys. We are paying to trade. And the only way you're going to make a profit is if you're making better than a 1-to-1.
100%.
If you make a 1-to-1, you're just going to keep kind of struggling along and trading. And that's what we always try to put out there. We don't like to put out there, kind of the fake part of trading that, saying that you're going to make that, thousands of dollars every week.
Right.
That's not the truth. If you're a good trader, you can make, 500 to $1,000 a week, but you have to become a good trader. And the only way to become a good trader is to see your stats actually following your approach.
Right. And it's also, I mean, here's the thing. I guess my touch on that is that it depends on your strategy, right? If you find a high accuracy setup, in your risk to reward doesn't necessarily have to be that good if the accuracy is high enough. But with most type of momentum day trading strategies like we use, that's not really the case. I mean, the VWAP fade had a 73% accuracy rate, and that's almost as high as it gets from like what I see. And so risk to reward is crucial with the way we trade. But there are certain strategies at the same time that possibly maybe trading ETFs a certain way that may give you that higher accuracy, but not necessarily the risk and reward. And that's okay with those. But like I said, I guess I just wanted to touch on that specific point.
Yeah, at the end of the day, you guys are going to see that you can make these stats vary a lot. The real key is that I always say, like, kind of take the approach, is my strategy matching my results? Because if it's not, then you're not trading that strategy. As much as you want to trade a strategy, if you're not seeing your results match your strategy, that means your execution is off and you can't trade that strategy.
Right.
It's not to down yourself, but figure out how you can, one, get the execution where you need it to be, and two, actually trade that strategy.
100%. All
All
right.
right, guys. So we're gonna start it off with the first trade. I actually I want to show you guys the worst loser of the week. This is an actual trade that I did, kind of a little bit after stream, not too much after. It was about 10 minutes after the stream. I was watching Kron break down. I thought there was a good flush on the level two, and it goes to show you, even I can get faked out. We're not perfect, and we take trades outside of our strategy. And when we take trades outside of our strategy, we get burned. And this is a great lesson to take. I could have made money on this, but I would have looked back on this and not been happy about where I'm taking this position. I took this position on Kron. I first shorted 200 shares at 89, and then I shorted 300 shares at 90. Thought I was getting that 91, but I did that market sell. I got filled at 90. Had an average about pretty much at 90 with 500 shares. Was holding up to about $9. Um, I wanted to hold a little tighter, maybe about 5 cents if it could at least get through this level. But what happened in this trade was I ran into what I always talk about is fighting trend. And when you fight trend, you get killed. If it's a bull day and you're a bear on a bull day, it's going to be very hard to make money. And that's what I ran through on Kron this day. If we look at the daily chart first, we see this daily chart. It's gone down. It's made that last push to 13, and now it's gone up and created that resistance. But right before on this day, I thought it was going to be able to bounce off this support and come right back back down to the sevens. And that's not what happened here, guys. I got faked out. I went and shorted into this kind of bull flag. I thought I got the breakdown right here, right before at 80s. And it was going to break down right here, right after, come back down to the 870s, get below VWAP. And that's not what happened here. So I'm going to go ahead and pull up the chart a little bit closer on Thinkorswim here so that we can see the chart. Yeah. Yeah, 100%. This is a lesson in trying to trade against trend. And when you trade against trend, most of the time you're going to get burned. A lot of time when we short stocks that are going down and have gone below VWAP. Let me load my studies here. Hold on a second. There you go. All right, guys. So what I saw necessarily here is that little breakdown right here at 890s. This little breakdown showed me that it was going to hold. I was looking to get in right here in this area, thinking that it was going to hold this resistance up here, 94s. And I was really holding up to this candle, which was at 897. But as it broke through here, I got squeezed pretty hard and got filled on a bad fill up here at 902. But this is what happens when you fight trend. As much as I use my strategy, guys, here, what ended up happening is someone bought up here. Someone someone was not believing this stock was overextended, and they bought the dip here. They took size, and that's what I always mean by one trader can ruin it. As much as it looked like a level two wash down here, someone came in and bought up these greens right here. You get this strong reversal candle right here. This is the three advancing candles, three green candles that are actually higher, close higher. Each one, the body closes higher, and it causes this commotion all the way up. And it really kind of rejects down and kind of holds for the rest of the day. But just that little buyer right there rejected this stock coming right back down to the VWAP. So, we're not going to always be perfect, guys. We're always going to make mistakes. And most of the time when you make mistakes, you have to ask yourself two questions mainly, I say. Was it within my strategies? And the second one is, did I make a trading error? In this trade, I didn't really make a trading error because I feel like where I shorted it, it's not a really bad spot. risk to reward. I got out. I was looking for this move down towards the 878s and down to 870. So in risk to reward standpoint, yeah, it's a good trade. But is it a good trade because is it against my strategies? Yeah, this isn't really the strategy I want to be doing, guys. I look for pattern breakdowns at more 11 o'clock on stocks that have gapped up and made that first move. As we know, Cron on the daily is not gapping up. It's not its first day. It's making a move back up to a resistance, and I'm fighting trend here, guys.
Right.
It's been how many green days in a row, and I'm trying to short this stock.
You're trying to protect the
Not
top.
not when it was coming down here and it was coming down here. I'm fighting the trend, and that's when you have to learn to kind of go against it. You shouldn't be shorting the stock, and it can happen when you're so good at a stock. Especially you start getting a little confident, and especially I don't trade every day. Sometimes you're going to make the move, or you make the wrong choice, and you try to trade a stock while it's making its up move. It's going to happen. These stocks are going to run.
Yeah.
All right, guys. So let's go and talk about my other trade here. Let's talk about the best trade. I know you guys probably remember my trade here on Yoko. Yoko bought 200 shares there at 725. And then I felt really confident in the position as I saw sizing get in there. And this is when I took a shot. I said, as long as I can risk about 10 to 15 cents, I'm willing to take this trade and risk my risk for the day. I went and I bought another 300 shares. So now I had a position of 500 at an average price of 727. As I immediately called it out in the chat, you guys heard it just took off like a rocket. Was I predicting it to take off that fast? No, but what happened is just volume came in and it took off. What I really saw in this stock is the daily. I'm going to show you the daily a little bit better in Thinkorswim in a second, but this is really the reason and why I took this trade is the pre-market. The daily just looked bullish to me. It looked like it was holding. It looked like all it needed was momentum, and with momentum, it could have a nice reach out for resistance. So as this stock came, it was kind of very boring in the morning. It didn't really make a move. It kind of just hung out, and then as the open came and hung out, it kind of broke out a little bit, but not really enough to get enough on enough radars. Like I'm sure not that many people were watching this stock as I was watching it, but I saw the pattern. The pattern speaks for itself, guys. And when you start seeing the pattern, kind of hold, hold, hold. All you need to confirm pattern is volume. A lot of traders like to ask me, how do we confirm a pattern, or where's the confirmation? The confirmation doesn't come from the pattern. The pattern, it goes and it actually fulfills itself because of volume. And that's how you really learn to be a trader, is that you look for that volume to fulfill your trades. And that's what happened here, guys. I was able to buy up after I saw that inverse candle that I really like. I love this candle when I'm going long. It shows great reversal and strength at the bottom. So buyers at the support. And I got that great extension, immediate eruption through the highs, and I was able to sell through that first push, sell a little bit more, just because I was up so high and I had a good amount of shares. After that, I really started targeting my sells and was able to sell some there back at the high of day, which was 790 at the time. And the only reason I was able to sell here was because I put the sell order out. A lot of people tell me that they can't sell their order at the highs. And the reason they can't sell their order is that they either try to hotkey out or they try to set their price as this price approaches. If you set your price as this price approaches, you will never sell up here on these high wicks. The only reason I sell up here is because my order is sitting out there on the pending order and I get to sell. And how you do that is you don't put it out when you're down here. As the stock approaches 780, you go and you put it out because the next boost should get through that 790, fill you, get right above it, and then just quickly move right back down. That's what I got in this stock. I was able to hold a little bit of shares and sell some maximum shares all the way up there to 847 and 836. So this is definitely a home run in any books for any longs. The great thing about this pattern is that it coincides twice. It does the same pattern twice. This one a little bit more complicated because you get this wiki pattern, but it does the same pattern. I could have bought up in this area, the 790s for this 8 breakout and bought and sold some more in the rip. That's what I'm trying to get into. I always like to tell you guys how I can even improve, and how I can improve in this stock is after these sales right here, I had a good amount of money. I could have took my shot in here instead of taking my shot later where I took a little bit of shares here and sold out. But I could have took my shot here in this area after the 3 ups. And then we can kind of take a look at this chart a little bit easier on Thinkorswim. This chart really plays out, guys. You know, the reason I took this trade is that I saw that 1 up, 1 down, 2 up, create that motion right here. So this is a bunch of accumulation. Then it just holding support. Too good, guys. Whenever you see a stock hold support like this, there's something going on, guys. It doesn't want to break down. If it's not going to break down, it's usually waiting for volume to break out.
Yeah.
That's a good tip to learn. It's something that I've seen over time is that if a stock does not want to break down, if it's holding that support over time, especially for, like this is from 930 all the way to 955, it just doesn't want to break. What happens is the littlest amount of volume pushes it up.
Right. And then when people see it break that trend, more people jump in and it starts to squeeze the stock up.
Yep.
Shorts
And
start
like
covering,
it fulfills, like I always like, it's volume fulfilling the pattern. And I was able to buy in right here, guys, at 925, at 725, right there. I think it's as good as a buy you can get because you're able to risk right off of this line down here, which is 716s.
But yeah, that's like the best case scenario, man. That's like that thing went from 730, 725 to 790 in 1 minute. So just crazy volume comes in confirming that trend.
Yep. All right. So that's going to be for my trades.
Hey guys, don't forget to go ahead and join us trade live every single morning. We start the stream up around 9 a.m. That's when we're already going through the news. You can see our scalper scanner as early as 8 a.m. Eastern. We trade until about 11 Eastern, sometimes a little bit later. But definitely come and join us and watch us trade live so that you can learn from our experience. Beginner in, beginner out.